Good evening, students. Welcome back. So today we'll start our discussion with this another topic, which is about audit planning largely. Okay, so when you talk about this audit strategy, in terms of the approach which the auditor will do, all of this is what? All of this is nothing but a part of planning. In fact, planning is one area over which we have had some discussions. So it's not that we have discussed this audit planning per se in detail, but there are a lot of aspects around the audit planning that we have already touched upon. Okay. And this audit planning is what it basically, you can say, happens to be one of the most important areas of the audit. Yeah. And then that's where you can say most of the efforts of the audit team should have been involved. Right. So when you talk about this audit planning, really, now the question arises that what do you include therein? And what is this planning all about? Yes or no? So now these are some of the things we are going to, of course, discuss today. But as regards this audit planning or any planning, now one thing is for sure. Yeah. So if let's suppose we were to execute anything, say there is any project that we plan to do, and if we don't plan that, okay, and we straight away get onto that project, means we jump onto that, we start executing that. So there are high chances that its execution may not be appropriate. So no. Yeah. So in such a case, question marks could be there as around the efficiency. And maybe we are not really moving further in such a scenario the way the things should have been done. Yeah. So at times you can have that sort of situation as well. So similarly, when you talk about this audit planning, so what does it mean? So you can say in a very simple manner, we are talking about plan for the audit, means the way the audit will be performed by the entity. Okay. Now, when it comes to the audit planning, a lot of aspects may have to be considered. So let me just first of all take you to the working file, wherein we'll try to discuss the approach as to how do you really go about this audit. Now, talking about this audit plan, so you can say audit plan has got certain steps which are involved. And this step, audit plan, happens to be the first step for the audit cycle. And so let's suppose if you were to talk about this entire audit cycle, what do you have therein? To begin with, it's planning. Now, in case of planning, what do you do? Everything you want to perform. Say there is a particular area you want to perform certain procedures on. So you'll assess as to how significant that area is and where that area is insignificant. Why? Because depending upon that, you will check the extent of testing. Correct? Similarly, let's suppose if you talk about materiality, that will become the basis for a lot of procedures to be performed. Similarly, if you talk about the risk assessment, now is that important for the auditor? Answer is yes, because that's how the auditor will proceed. in terms of the various procedures to be executed. So if that is not done right, what will happen? There will be concerns around it. Yes or no? There will be concerns around it. So that's why all of these things which the auditor plans to perform, you can say in the second stage. What is that? Execution. Okay. So you can say to a great extent, auditor will plan that at the planning stage itself. Okay, so over here the auditor will plan those aspects, right? So that's how the auditor will want to proceed on this. Yeah. And of course, the next step therefore is going to be what? Execution. Now, execution is what? Execution is all about performing the procedures which have been planned by the auditor, right? Then we can say the next stage would be conclusions, but again, it is something which will happen simultaneously. Why? Because any work that is performed, what will happen to that? There will be conclusions, yeah, alongside. And once we are through with the execution, with the conclusions in respect of various areas which are required to be audited, which have been planned for the audit purposes, that's when the auditor will get onto the reporting. Correct? Yeah. So you can say these are the stages. And these are basically various kind of steps involved. Now we are talking about this first stage, right? Now generally, because we mentioned this to be a first stage, now generally a question may arise that when we talk about these cycles, so are these like sequential? So is it like that we'll perform the first thing, then we'll perform the second thing? So that's how we'll go about it. So let's try to understand that. Now let's suppose audit team is currently in the process of fieldwork. Fieldwork, we all know, fieldwork is all about execution. Yes or no? Over here. So audit team is involved in the fieldwork. Now, during this stage of the fieldwork, say the audit team comes across certain information which was not available initially. Initially means when the audit was planned. So it's a new set of information which they have come across. And definitely, if let's suppose there is some significant information auditor would have come across, and whose impact is likely to be impacting the audit procedures, means the execution stage itself. So it's likely to impact the execution. Now in that case, what do you do? How do you go about that? Yes or no? Some of those questions may arise, right? So that's why, even though particularly we are talking about planning, so that's why in the context of planning we will discuss this. So even though planning is something which the auditor would have considered at the first stage. Yes or no? But still, during the course of this entire audit, so you can say during the course of this entire audit, if anything comes across which may have an impact on the audit, which may have an impact on the reporting, right? So that's required to be considered. And that may also require a reevaluation of what? Of anything to be done. Means maybe certain information has been received basis which a particular area which was considered as say not significant by the audit team, now that appears to be significant. Okay, so that's why the extent of testing, maybe the approach for the testing for the audit of that particular area may need revision. Yes or no? So that's why when we talk about this planning, so we should not be considering that this planning once done is done forever. Planning is a continuous process. Okay. And during the course of audit, you may have to therefore replan. And the auditor should be wary of the fact. Yeah. So that's why we should say that this planning has to be a continuous process. Right? This planning requires flexibility on the part of the auditor. Means once certain procedures have been discussed, an approach has been agreed. So the auditor should not be thinking that it's frozen. Maybe certain situations may arise which may require planning or which may require further evaluation, which may require different set of procedures to be performed. Yeah. So that aspect needs to be considered by the auditor. Yeah. So that aspect needs to be considered by the auditor. Clear? Now it's again a very important consideration on the part of the auditor. Okay. Now comes the point that let's suppose if we were to plan. So what do we do in terms of planning? What all things you will consider at the stage the planning is involved? Okay. Now, just again take you to this another document wherein we will try to discuss some of these aspects as well. Okay, so when you talk about this audit planning, now why is this audit planning required? I think we have already understood this. It helps the auditor by giving suitable attention to important or high risk areas. Yes or no? If the auditor is planning, what will happen? Any problems which might be there, they will be, or you can say auditor will be able to identify those and of course resolve them. in a timely manner. As we have already discussed, if the audit is required to be performed in an efficient manner, effective manner, so therein this requirement becomes essential. So this planning is crucial because without that, maybe the audit is performed in a great manner, but there are high chances of inefficiencies which may be there. Now, when you talk about audit or the field work or the execution, like we just discussed, now let's think about a company. Say you happen to be the partner and you are required to say audit financial statements of ABC. Now let's try to think about what are the considerations you'll have. Okay, so you'll consider about the size of the company, means how big is that, timelines. Why? Because what do you mean by audit? Audit means it's a service. Service requires people to be involved. Yeah, so you need an audit team. You need the team of people who will go there, who will audit that, who will audit the financial statements. Correct. But how do you do that without the people? So that's why for those people to be selected, one, in terms of quantity, how many people will be involved? Correct. Of course, it's not only about deploying the manpower. Yes or no? It's not only about deploying the manpower. It's also about, let's suppose we want to perform a work in an efficient manner. So how do you perform that in an efficient manner? You will want to have not only the people, but you will want to have the people who can execute that work in an efficient manner. Yes or no? So that means it's also about choosing which person will perform the work. Means right person for the job. Yeah, so that's again something we need to look at. Correct. Next, if let's suppose, say 12 persons have been deployed on the engagement. Okay, and it's been also identified who will perform the audit, means which all areas will be performed by. Persons have been selected considering the industry experience. Maybe some of those were already involved in the audit in the previous periods. So some of those considerations have been given for selecting the audit team members. Now, for this audit to be completed, what was our objective? Efficient manner. Yeah. Effectively. Correct. Now, audit team will have to discuss that if let's suppose the work is done, maybe some of the team members are inexperienced. Correct? Now, how do they perform the work? And when they perform, how do you ensure it's correct? Means maybe there are some mistakes, maybe they have missed out on something. So that's a crucial element. So how do you go check that? Yes or no? So some of these concerns, how do you address that? Again, planning is something is going to help you. Why? Because it helps the auditor in directing, supervising, and also to carry out review of the work of team members. Right? Yeah. So that's again very important consideration. Yeah. Now, when you talk about nature and timing of the planning, now there are certain factors we'll have to consider. What is the first one? Entity itself. By entity, we mean to say the auditing means the entity which is going to be audited. So you'll want to understand the size because that will have an impact on the audit. The complexities which might be involved in relation to that entity. That will also have a bearing on the audit. If let's suppose it happens to be a continuous engagement, say for 24-25 it was performed and now it's 25-26, and let's suppose it's a continuing audit. So therefore what will happen? In the past year, the audit team would have obtained a learning in respect of what? In respect of company, in respect of their work style, in respect of the challenges, in terms of the timelines, maybe in terms of the mistakes, yeah, which could have been there. So whether those are material or immaterial, right? All of these things, how do you get to know? So that's something you'll get to know on the basis of the previous experience of the auditor. Correct? So that's why sometimes this factor in relation to the previous experience may also be an important consideration. Yes or no? Yeah? Now, during the course of the audit, definitely some situations may change. And then that's something we have talked about, that during the course of the audit, if let's suppose some situations change, so that definitely requires an evaluation. Okay, because when you talk about planning, it's not a checklist which is fixed in nature. No, it, it's the one which is flexible, and any changes that may be required need to be incorporated. Correct. And that's why we say that planning is not a discrete phase, rather a continuous process. Yeah. and it's something which continues till the time audit is not wrapped up. That's how you should consider. So does it mean that each and everything you will keep evaluating? No. On the basis of the information that you come across, you may have to get into that part. Correct. Yeah. So that's how you need to look into it. Now, some of the steps you get to see when you talk about the audit planning, right? So let's try to look at those steps. First, identifying the engagement team and the involvement of key team members. Now, is this important? Yes. In fact, we should call it as super important. Why? Because through the team, you will get it done. So that's why finding the correct number of people and the experience of the people in relation to the audit is the first step and the most important step. Now, when you select the audit team, means let's suppose if you were to plan any project, so how do you go about it? So how do you check? How do you evaluate that, right? So some of these factors you will consider. And while considering that, again, the mix is something that you will want to get into. Means what's the mix of persons? Ideally, if again it's a big size, yeah, because that again varies depending on the size of the organization, complexity which is involved. But how do you really go about it? So it's a mixture of some senior members, means the experienced one, and some of those relatively new. Yeah, so that the experienced personnel, senior personnel can guide those who are new. Yes or no? So that's again a very important consideration. Preliminary engagement activities. Now, for you to start, what do you need? Engagement to take place. Now, because we are talking about the nature of service, which is restricted and which requires various compliances on the part of the auditor as well. So how do you really go about it? So that is one aspect one needs to consider. Okay, so that's where all of these preliminary engagement activities, they need to be wrapped up. Because without that, what will happen? There will be challenges around this. Now, once you're through with this, that's when you get into the audit strategy. Because once you have the people, yes or no, that's when you will plan. Because who will do this planning also? People only. And people means what? Of course, those persons who are going to join, who are going to say start the audit engagement. Yes or no? Now, what will happen? Let's talk about this planning now. I'll just go back to the same document we just discussed about these four cycles when we were talking about it. See, in terms of the planning, auditor want to obtain as much understanding of the organization as possible. Yeah, because through the understanding, auditor will be able to perform this. Now, there comes a point that if, let's suppose, auditor were to perform this, so now practically, how do you really go about it? How do you perform? What all things you do? So that's where what we will try to do is we'll just try to look into this aspect, say by taking an example. Okay, continuing on the same company, ABC Limited, its audit is being planned. The engagement team, you can say, has had a discussion with the partner at the first level, and they have also say met the company client personnel to get a preliminary understanding about the nature of the business, about the processes which are involved. Yes or no? So that's why for the planning, what do you need? Planning meeting. Or I should say meetings. Again, depending on the complexity is on. Now, when the audit team will meet, what do they do? That's where they will discuss everything. Okay, so now understanding of the entity they have obtained and any update which may be required. Zero. Correct? Next, they will discuss the financial statements, which may not be available in the form of financial statements because it's a preliminary stage of audit now. Yeah. So you can say a draft version. Yeah. A draft set of financial statements is something they will be looking at, right? And now they will also get into the assertions. They will get into the understanding of the process. Let me just add it here only. Process which is involved. Now, various processes you come across in an organization. You can say sales is one, procurement is there, payroll is there, right? HR is there, IT is there. Somewhere or the other, the understanding of the business, how do you get that? By understanding of the process only. Yes or no? Yeah. So how do you really go about it? So that's an important consideration. Correct. Another point which may arise could be in relation to the significant areas. So you can say it's all about evaluating which all areas are significant, which all areas are not so significant, which will again be dependent on the assertions, and which will again be dependent on the risk assessment. So on risk assessment, we are going to have a separate discussion, but somewhere or the other, you will find that all of these requirements related to the audit are linked to each other. Yeah. So that's why, basis this risk assessment, what you will reach that level. Correct? Now, once this is also done, what do? You will get on to the step. Yeah. So your responses to the risks which are involved. Correct? So that's something you will get into. That's something you will discuss and understand, which is all about procedures. So basically, we are talking about the procedures only. So as an auditor, when you appoint audit, what do you perform, how to perform? Right. So that is again an important consideration. Correct. Next, in terms of this risk assessment and this evaluation of significant areas, assertions, or all of these points we have been discussing. So who will be discussing this first? It's the audit team, engagement team will discuss this internally. Yeah, because some sharing of thoughts is possible. We get to know the perspective around the entity. We get to know the perspective around the audit on the basis of the dialogue, or you can say discussions you'll have with the senior members of the engagement team. Correct. Now, over here, another very important aspect. So now, because it's a linked concept, so that's why it's a very, very important step, and that's something you call as materiality. Yes or no? Materiality. Now, materiality is important again. Why? Because how do you filter? How do you set a threshold? So, materiality is something which provides you. Yeah, so now when you talk about determination of materiality, okay, the parameters, you can say the indicators which need to be considered. All of these are very, very important at the stage of the planning itself. Correct. So that's why it's very, very important for the auditee to look at all of these aspects at the planning stage itself. Yeah. So generally, an audit team may think that, okay, I'll get onto this maybe slightly later. Maybe I'll get onto this, say, once we are through with a particular procedure. No, that's not the right approach. Correct. Now, let's go back to the same document. We'll just try to get some more perspective around the planning. Now, another very important area as around the planning arises in relation to direction, supervision, and review. Now, let's think about it. Say the financial statements are audited, and there are 6 areas which are handled by, say, a particular intern. Okay. Now, these 6 areas are important to me. So you can say that these are not the significant risk areas, but of course, they are something which is important otherwise. Now, in this case, let's suppose these person are new. They are not so experienced. So in such a scenario, what will happen? They may not be knowing about form the audit. Correct. So if they don't know about how to form the audit, and if they are involved in the fieldwork, if they were also involved in the planning, so how would it help? So they will, even though they have not been involved in the audit practically, but that's the thing which they are going to now achieve. Yeah. And that's why they are being considered for the purposes of audit of this entity, right? And that's where it becomes all the more important to ensure that some of these areas don't get missed out. Yeah. So what if maybe a particular intern didn't know or maybe was not well? So a mechanism has to be there. Important point is a mechanism has to be there as around the direction, supervision, and review. So now once you have that mechanism, chances are that such type of situations will not arise. Wherein some of the things get skipped out, some of the things are not maybe put down in the form of the outcome, which may again have a huge impact on the financial statements. So that's why some of these considerations become important. Okay. Now, moving further. Planning meeting we just talked about. So planning meeting is all about planning. Yeah. And this is the meeting wherein the auditor will be deciding upon everything around the audit. Of course, it's dynamic, so new things will come up, basis which auditor will have to change his approach strategy. That can always happen. Yeah. But to begin with, what are the common areas? What are the common discussion points you come across in case of a planning meeting? Let's try to understand that. First, what does this entity do? Who are the key people? What are the key areas of concern to address? So basically, let's also understand if the understanding about the business has not been involved. See, the understanding is not there. So what do? You will start with that. So this step appears to be largely on, right? Wherein you are trying to understand about the entity. Of course, if that's a continuing client, so you'll have some members who would have audited that entity, who would be knowing about that industry also. But that need not necessarily talk about each and everything which is required to be considered from the auditor's perspective. So even though we are discussing all of these situations, examples, but please understand The underlying concept is what? Underlying concept is all about looking into those things which may have a bearing on the financial statements. Correct. Next, what have we learned from the previous audit engagements meant for the continuity? See, if let's suppose as an audit team, you already have the experience, you already know about it, then what's the point of getting into some of these things? Yes or no? So when you already know about it, when you already have an understanding about it, so what do you want to achieve? You will always want to leverage upon that. Correct? You will always want to leverage upon that. How? By having these planning meetings, because that's the meeting wherein not only the freshers, or you can say new joinees, or you can say relatively new people of the organization are involved, but because it's a joint discussion, so that's why a lot of inputs will be brought to the knowledge for those new joinees who are not really familiar with some of these requirements related to audit. Correct. Next, what's changed this period? So as we discussed, it's not only about obtaining the understanding. Maybe the understanding already exists. Say it's a continuing engagement, so understanding is already there. Now comes the point that what if something has changed in the business? So it's also about obtaining, or you can say obtaining an updated set of information. Right? That's the thing. So that's how you get into it. What is the timing of review engagement and who will be assigned? See, these days you don't have any project without the timeline. So no. So that's why the idea is not only to plan to complete the work, it should also be planned in a manner that the work gets completed on time. Yeah. Because otherwise, what will happen? Otherwise, this can have a huge impact. Yeah. Now, what is our response to the areas of us? Where is more work required and where can we reduce the work? So it's all about deciding the scope. Yeah, so we already talked about it, that as an auditor, what do you want to perform? Okay, so that's something you need to look at. And then comes the next and very important point: materiality to be used. So what is going to be those materiality levels, those thresholds? So you can say there are some, again, sort of indicators are available. Basis which, what do? You go check as to what is really required to be done. How is that really required to be done? Correct. And what is going to be the extent of testing? Do we have any thresholds basis which any information, even though it's an error, but still can we just ignore that aspect? Why? Because that's immaterial. Yeah. So in all of these cases, you can say this is what the audit team should also be worried about, and in terms of their discussions with the audit committee, that plays a very important role. Right. Now, benefits of involvement of key team members. Now the question arises that if, let's suppose, we were to plan. Okay, so let's go back to that example of plan. So I think I'll have to share the, So there we go. So what I've done is I've just taken you back to that working file. See, in this case, when you talk about any benefit which is provided to the company outside the books, so do you really think you will be able to get onto that level? No. Because our scope is what? Our scope is all about audit of the financial statements. So anything which is impacting the financial statements, something should have been accounted for. Yeah. So there can always be some suggestions for the entity to you, for them to work on basis which they can bring out the improvement. But that's only one of the aspects to be considered, right? Now, moving further. Okay, again, let's go back to that document. So just give me. Yeah, so there we go. Right, next. Other team members, when you involve them, you can say the senior members of the team. Okay, so over here the context is same. Engagement partner should be there in terms of planning the audit, right? So that's how you will go about it in terms of audit. Now, what are the benefits? So you can say the benefit is all about first requirement that we have. What is that? If let's suppose this audit is conducted and completed in an efficient and effective manner, so is it not beneficial? Answer is yes. That's very beneficial. Okay. So that's something you'll have to consider. That's something you'll have to get into. So collective knowledge and experience are shared in the process. Of course, clarity to the team of their role and responsibility. Right? Now, let's look at this example. Planning meeting is held between audit team and the client team before the start of audit. And so it's generally what do? You hold this with the other team members, means the audit team only, not really the client participating in that. Client, you can say this top tier and the top management, they will not be involved in that process. Yes or no? So that's how you'll always want to go about it. Correct. See, if you talk about planning meeting, in a planning meeting, audit team discusses the issues faced. When you are saying audit team, I am assuming that to be the statutory audit, right? In the planning meeting, what has happened? Audit team conducts sort of, you can say, maybe checking as to what is really happening in the market as far as various things are concerned. Now, in planning meeting, audit team discusses the issues faced, misstatement identified during the current year audit in order to finalize the report. Yeah. So now, in this case, what do you think about it? Is it true or false? So it's false. Why? Because planning meeting is supposed to be held when? Before the start of the field. Yes or no? Because if let's suppose you have started off, don't know. So what do? Either you go back, plan, and then come back, or you plan alongside. Yeah. So planning is something which is essential. So that has to be there for sure. You can't really go about it without this. Yeah. So that's a very, very important consideration on the part of the audit team as well. Now, when you talk about those preliminary engagement activities, remember we talked about the preliminary engagement activities, that those are also required to be put in place. Okay. and in respect of those preliminary engagement activities. So what is it the auditor is required? Okay, so let's look at this. Perform procedures regarding the, you can say, client acceptance or continuance. Yeah, so you can say client acceptance and continuance and the specific audit engagement. Okay, next, evaluation of compliance with ethical requirements. Means when you talk about independence, when you talk about integrity, and so they happen to be the fundamental principles. Yeah, so that's why we need to ensure that all of these are taken care of in an appropriate manner, right? Agreeing the terms of engagement with the client. Now, as an audit team, before you really go and start, you do. You want a confirmation from them. You want a signed engagement letter, something which you use, which you speak in relation to what? In relation to agreement. So now, so that's all about the engagement letter. So now, all of those terms. Why? Because if you are performing a work, so you should have a document in place basis which you will be performed. Yeah. So next will be about agreeing the terms of engagement with the client, of course, and of course understanding of such terms. Why? Because maybe some of the things are very difficult to manage considering the timeline involved. Maybe for this 25, 26. Yeah, so this year is gone by. I'm just taking this as an example. The audit is not yet completed. It is not yet started. So what will happen? So this board meeting, which will take place as around the impair, as around the appointment. So how do you really go about it? How do you really get into those things? So that is again a important consideration on the part of the auditor, right? Performing such initial activity enables the auditor. So what will happen? It will enable the auditor to identify any problem right from the beginning of the engagement. Yes or no? Yes or no? So that's how you'll get to know about it. Yeah. So which is otherwise not possible. So let's try to look at this small example. We are not required to ensure independence of third party consultant hired only to carry out stock at different locations during the audit. Now, what is the audit? It doesn't matter in terms of the audit year, but the question is, what do you do? How do you go about it? So, third party consultant involved in an, you can say, audit is also required to be independent. So you can say that independence happens to be another very, very important consideration on the part of the entity as well as the auditor. Correct. Next. Now, engagement letter. We discussed that engagement letter is basically a document which will contain the terms and conditions, the way the things are required to be done. Okay, in relation to the existing investments or maybe in relation to the investments which are planned, which are going to arise in the future. So how do you really go about it? How do you really assess that? So that's something we need to now consider with the help of this example. Engagement letter is prepared only to agree on the audit fee. So I think it's quite clear. Yes or no? So it's quite clear. Now in this case, whether it's true or false, of course it's false. Why? Because To say that we want to have a clarity on the audit fee, so we want that, of course, that's correct. But to say that this is prepared only to agree on the fee, this particular part is not correct. Yeah. To say it's only to agree is not the right statement. Correct. Now, what is going to be there in terms of the audit strategy that you now plan to get into? Now, first, of course, as we discussed, what will happen in terms of the manpower, headcount, force level of people, whether those are experienced, whether these are new interns, or whether they are inexperienced pool. Yeah. So now what is the pool? So it's not only about resources to deploy. You can say it's all about selecting the resources, having the right one. Okay. Now, next, amount of resources to allocate. See, because audit is again a service entity will want to render, and for every project, whether it's audit or not, what will the auditor do, or what should the auditor do? Get into the overall audit strategy. Resources to deploy, amount of resources to allocate. Okay. When these resources, when you say are to be deployed, means when do you really start? Respect of various procedures. Means, say for example, you have completed the planning part. What do you do? Let's suppose you get into a third party. Third parties. Okay. So now for this third party, what do you need? You need that the approach is such that it's able to recover whatever is in it has invested. So that's what you can say. Generally, those who are staying this, who are holding this for a long period of time, they must be knowing that's how they will want to get on with that. Correct? Now, key aspects of developing an audit plan. Now, what are those key aspects? Of course, as we also talked about nature, timing, extent of planned risk assessment procedures. So that's one. Nature, timing, extent of planned further audit procedures at the assertion or cycle level. So that is again an important consideration. Identifying materiality. Okay, now for materiality, you don't need to get into say identification of something. It's all about understanding. Yeah. Why? Because when you talk about materiality, so a stage which gets sort of impacted due to this is going to be what? It's going to be the cycle level, correct? Then, of course, in the past years, if there have been some issues, there have been some communications, so that will only help you to get that liquidated fast, correct? Now, let's look at this small example. What are the circumstances where the auditor need to charge the planned procedures? Yeah. So now, if you look at this, one of course is the unexpected event. So, of course, any planning which is there may therefore have to wait for another 1 day. right? Changes in condition. So if let's suppose there is any change, maybe there is a breakdown, there's a repair, some of the costs you will recover, some of the costs you don't recover. So what do you do? That's when you will get into the audit or these discussions with the concerned team which is involved. Changes in condition. Example, scopes. Correct. Next, audit evidence. The auditor may become aware of discrepancies in the accounting records or conflicting or massive evidence. So that's again an important consideration. Acquiring information that is significantly different from the information that the auditor had at the time of planning. Now, this is again important consideration. Why? Because that's where we discuss that it's not only about obtaining the understanding, it's also about checking first of all as to what is it that we have looked into. Further, it's all about ensuring that all of these aspects are getting covered. Yes or no? Yeah. So that's why another consideration which may fit this criteria happens to be what? Audit being a planning, audit being a continuous process. Correct. This is something we need to take care. This is something we need to look into. Extent of misstatements. Now, what do you mean by misstatements? See, by misstatements, we have already discussed earlier as well. So it's all about mistakes. Now, mistakes could be intentional or unintentional. So if that is unintentional, we call them as error, right? Otherwise, you call that as fraud. Now, in this case, when you talk about the extent of misstatements that the auditor detects while performing substantive procedures may alter the auditor's judgment about the risk assessment and may indicate a significant deficiency in the internal control as well on the part of the engagement team. Correct? Next. See, when you talk about direction, supervision, review, are all of these important? Answer is yes. They are all important. Okay. And they are required to be looked into. Now, requirement by an auditor may be dependent on certain factors. So what is that? What is the entity under audit to begin with? Of course, its size, complexity, or in terms of the business which is there. What are the areas of audit? Maybe those are assigned to you. And all of these allocation in terms of the work to be done. Now, where do you discuss that? That's the planning stage only, right? Assessment of risk of material mistake. And the audit examination. Now, at the planning stage, you would have performed the risk assessment. Basis which what you do, you will come across certain areas, right? Which may be a concern, which may be a point of consideration for you. Now, how do you really go about it? So, what are the factors you will consider? Okay, now all of those things will have a bearing on the approach, on the strategy which the auditor is going to take. Correct. Now, capabilities and the competencies of the audit team members. So are those important? Answer is yes, those are important. Why? Because with the competency and the capability, what do? You would have prepared the team mix and you would have also allocated the areas to those team members. Yeah. And that's how you will go about it in terms of performing the audit engagement. Now, what are the documentation requirements? So generally, what do you do? Anything that you plan, you'll document that. Generally, you will prepare a planning meeting document, something which you also call as planning meeting memorandum. Yeah, so wherein you will put down every information, uh, people who are involved. Okay, so it's similar to what you do in case of minutes, for example, of the board meeting. So people who were involved, what was the agenda, what all items were discussed, what all items were not discussed, uh, what all procedures have been planned as around the areas which are under consideration. Okay, materialities is one aspect. Understanding of the entity in terms of how that is really required to be looked at. Yeah, so all these aspects therefore play an important role as far as the documentation requirement is concerned. Why? Because something which has been looked at already and which will become the basis of performing the procedures. So is that important? Answer is yes. That's important for anyone to look into, for anyone to get onto the details. Correct. Next, pre-audit activities. We already talked about it. Yeah. So will you be documenting that? Yes. Very, very important. Independence, the procedures which would have been performed, which will also be driven by some of those requirements related to SQC, which will be there in the policy framework for the organization. Again, a very important consideration on the part of the organization, right? Audit strategy. Decisions taken to make audit plan means, of course, about the audit plan you discuss, you document, okay, wherein you would have discussions with various team members as well, correct? And then it's about the audit plan as well. Nature, timing, extent of audit procedures, all of this. Yeah. This aids the review of how an engagement was conducted. Usually, standard audit programs or the checklists are used for this purpose. Now, you may or may not want to use this. Again, it's up to the auditor the way they want to go about it. Some of the resources, the way those are available. See, important thing is not how you document. Important thing is to ensure that everything which is being performed, or say which is performed, is getting documented. Yeah, because if you don't do that, then what will happen? It will be considered as if that's not done. Yeah, so that's what you understand about audit documentation, isn't it? That something which is not documented is considered as if it's not done. Yeah, so that's how you will always want to. Now the next part, materiality, very, very important, isn't it? So therefore, in respect of materiality assessment, so a detailed documentation is required. Means what all factors were considered. So select the basis first of all, so for you to determine the materiality. A lot of criterias, benchmarks which are available. So whether you want to pick up, say for example, profit as an auditor or say revenue, and why so. Yeah, so when you, let's suppose, pick up a particular basis maybe the benchmark which is available. Now, what is going to be the materiality? What now materiality again has got two terms. One is about this materiality as a whole, and second is all about the performance materiality. So, how do you really go about it? What is it you'll want to consider there? So that aspect becomes important. Significant changes in the audit plan and strategy, which may arise. Why? Because of some additional information. There's some additional information which the auditor comes across. Correct? Now, for that additional information, what will the auditor check? Whether this will require any changes in the planning, in the approach, in any of the procedures. Yeah. So all of these factors are important for the auditor to evaluate. That's how the auditor will always be considering that. Yeah. Now, when you talk about those engagement formalities, what are the considerations? Of course, say very important one, discussion with the outgoing auditor means the previous one. So discussion with the management, reason behind the decision. So let's suppose if the auditor is changing, so what is the reason? Right? So discussion with the management, issues related to application of accounting principles. So if at all there's any complex matter during the year, which is put down in a manner wherein the audit team and the entity, they have a different view. So how do you go and settle that? Correct. And of course, if at all it's a first year, so what will happen? In the first year of the audit, say 24-25 was audited by ABC, and now 25-26 PQR happens to be the, so they are the auditor. Now for this auditor, what do they need? It's a new auditor. Yes or no? So now this is what 1st April 2025, or you can say 31st March 25. So this is again 31st March 2006. Correct? So now opening balance you will need. So if you want to go about say a transition, yeah. So from the previous auditor to the entity will have to consider that. Yeah. Because for the auditor, pick up the balances basis which the auditor will start. Again, a very important procedure gets attached, something which you call as audit of opening balances. Now, it's not a specific, or you can say a separate requirement, very much part of the stat audit only. Yeah, so it is something which is by default required to be put in place, which is essential. Okay. So that's why, again, an important consideration from the planning perspective. So now, what we can do is, first we'll try to get into some more aspects. But before that, what I'll try to do is I'll just try to pull out some questions. Okay, so I think we can discuss some questions, and then of course, we'll pick up some more aspects wherein we'll just try to get into the further details of that particular area. So let me just get on to the document now. Yeah, so here we go. I'll just open this set of document. Okay, so let's try to into this. Now, I think, yeah, so this document is now shared with you. While auditing Z Limited, you observe, so you happen to be the auditor, you observe certain material financial statement assertions have been based on estimates by the management. Okay. As the auditor, how do you minimize the risk of material misstatement in given situation? Okay. So now let's look at this. Because we are talking about the estimates. So that's why there's a very specific auditing standard which talks about how do you go audit the accounting estimates. SA 540. Now, as per SA 540, what do you do? How do you really go about it? First of all, auditor shall obtain an understanding of the firm. Why? So that basis for identification and assessment of risk of material misstatement for the accounting estimates could be obtained. Yeah, because that's the first thing which you'll want to get into. Yes or no? Now, what do you consider? What is that? First, requirements of applicable financial reporting framework. Yes or no? Because if there is a specific requirement that a particular provision is required to be done. Okay, if let's suppose, for example, when you talk about useful life of PP for an entity, so what do you have? You have some indicative useful lives which is available under the Companies Act. If at all you don't use that, give a note. Yeah. Now, those requirements could be there, basis which you may see the estimates have been across. Yeah, so that therefore becomes an important area for the evaluation. How the management identifies those transactions, events, conditions that may give rise to need for accounting estimates to be recognized or disclosed in the financial statements. Okay. In obtaining this understanding, what will the auditor do? Auditor shall make inquiries of management about changes in circumstances that may give rise to new or need to revise existing accounting estimates. So you can say this of course evaluation will have to be done. Yeah, this evaluation will have to be done. Next, estimation making the process adopted by the management, including So this, of course, estimation making process, you'll have to get into the details of that. What's been the method? So at times, some of the models may have been involved for the valuation purposes. Controls around that. See, any activity, whether it's all about making judgments, using certain assumptions, is nothing but a set of activity. And for the organization to identify the risk in any activity and to set up the controls corresponding to that. So is this required? Yes. From the company, you'll expect that. Yeah. So the same thing is required to be considered here, the relevant controls in relation to that. Whether the management has used an expert. Yes or no? Now, if at all an expert has been used, what will happen? The comfort level may increase. Why? Because there's a competent person on the part of the management to get onto that estimate. Yeah, so that's something you'll always want to look into. Of course, you'll also want to evaluate whether that expert is competent or not. So that's an exercise as an auditor you anyways have to get into. But of course, is that required to be done? Answer is yes, that is required to be done. Assumption underlying the accounting estimates. So what all assumptions are there basis which these accounting estimates have been prepared, right? Next, whether this been or ought to have been a change from the prior period in the methods for making the accounting estimates. And if so, why? So, of course, this is one part wherein you will always want to get into. Yes or no? So if at all there's a change, so why that change has taken place? Okay. And of course, what is that change that is taking place? Yeah. So in terms of the calculations which are involved, in terms of the valuations which are involved, as an auditor, that's where you'll want to get into. Correct, because it's again about what it's all about, obtaining the understanding corresponding to that. Because basis that understanding, what will happen? You will be able to evaluate that further. Next, whether and if so, how the management has assessed the effect of estimation uncertainty. See, anything which the auditor is required to do, at the first place, management would have done that, isn't it? Yeah, management would have done that at the first place. So therefore, as an auditor, what do you do? How do you go about it? You will basically want to understand the process of the management which is involved in that, how they have really got into it, how they have really evaluated that. Yes or no? Yeah. All right. So now, I think before we move further, I think what we can do is we can just take a break. Yeah. So Ashok, let's take a break and then we'll continue. Huh? Okay, so we'll pick up some more questions now. Right. So A&Company was appointed as auditor of Great Airways Limited. Okay. Now, as the audit partner, let's suppose, so it's something which you'll call as first auditor. I mean to say the new auditor. First may not be the right term. New auditor. Now, for the new auditor and you being the audit partner, what factors need to be considered in respect of this overall audit plan? Okay, so let's talk about it now. When we talk about overall audit plan, there are a lot of considerations you'll have because it's all about overall approach that you need to put in place. Yes or no? Now comes the point that what all considerations you should have. When you talk about an audit plan, so what's the objective? Objective is really to get a direction as to how do you really move forward, what all things you do, how do you want to go about it. Yeah, so some of those considerations you need to have. Okay. And while doing that, uh, what are the steps, what are the procedures you'll want to get onto? So we can say this overall plan is basically intended to provide direction for audit work programming, includes determination of timing, manpower development, coordination of work with the client, other auditors and other experts. Okay, so these are the things you will want to consider. Correct. Now the auditor should consider the following matters. Now, what are those matters you will want to consider? First, terms of the engagement. Yes or no? See, generally, when you talk about statutory audit, so you may be thinking that what is there in the terms of engagement, because statutory audit is all standard, isn't it? It's all standardized, means you know what all procedures are required to be performed, how those are required to be performed. Okay, and basically it's all audit of financial statements, and it's being statutory, so that's why. Can you really cut down on the scope or increase the scope? Why? Because audit is financial statement, so you have to eventually get into a true and fair view, which is true. Okay, some of those aspects are definitely correct when you talk about the statutory audit, but even then, to have a clarity and to put down everything in a very clear and detailed manner is essential. Why? Because as far as any engagement is concerned, first of all, what do you do as an auditor, as the entity, means the auditee? You agree the scope of work. Yeah. And some of the things which may be important. So, for example, which financial year you are auditing. That's a no. And in terms of the engagement terms, the independence compliance, some of these factors will have to anyways evaluate. Correct? Next, nature and timing of reports or any other communications which are required. Again, an important factor. Yeah. Applicable legal or statutory requirements. Whatever are those applicable, you will have to put down, right? So this is something which the engagement letter will have. Yes or no? So when you talk about the terms of engagement, where do you see that? In the engagement letter itself. Correct. So in the engagement letter, you will have these things, right? That's what we'll talk about, these requirements as to how those are really required to be looked at. Okay. Next, accounting policies adopted by the clients and the changes, if any, in those policies. See, when you talk about the financial statements, for example, it's not only from the audit perspective that we want to discuss and agree. Why? Because it's all about the financial statements as well. Somewhere the management is responsible for that, but that's the underlying information which is going to be audited. Okay. So what is that? How is that prepared by the entity? Okay. Of course, accounting policies are going to be the basis for that. And if there are some changes therein which have been made by the entity, those are important to be looked at. Effects of new accounting and auditing pronouncement on. Okay. So if at all you have that. Identification of significant audit areas. Now see, audit is all about following a risk-based approach. So that's why to have a clarity in terms of what is significant, what is not so significant, is an important consideration. Yes or no? Now, as an auditor, what do you do? At the time of planning, you'll have to do this exercise. Why? Because these are the areas where you need to focus on. These are the areas wherein the extent of testing will be higher. Will be higher. Yeah. So that's something which is important to be looked at. Setting of materiality levels for the audits. You can say one of the most important requirements in an audit. See, when you go look at the objective of the audit, what is the objective of audit? Expressing an opinion about what? About anything which is crossing the materiality, means material misstatement should not be there. Yes or no? So that's why, what are you trying to check? What is it that you are trying to look at? Materiality. Why? Because when you go and evaluate at the time of reporting, you would have looked at those areas which can have an impact on that reporting later on. Yeah. So that's why you can say it's an important consideration. Okay. Next, conditions requiring special attention, such as possibility of material error or fraud or involvement of parties in whom directors or persons who are substantial owners of the entity are interested, and with whom transactions are likely. Degree of reliance to be placed on the accounting system and the internal control. Possible rotation of emphasis on special audit areas. Nature and extent of audit evidence to be obtained. Again, an important consideration, right? Work of internal auditors. Now, this is again an important consideration. Why? Because let's suppose during the year there are three significant risk areas. Okay. See, there are three areas which have been considered to be significant. Now, if let's suppose these are the three areas which have been looked at by, say, a third party, which is what? Internal auditor. So at first level or at one level, you can say somebody has audited that part. Now, does it mean that we don't audit and we just rely on that completely? Answer is no. That is, of course, not the consideration or should not be the consideration on the part of the auditor, because that's again something which auditor can't do. But the auditor can always leverage upon that. Correct? Auditor can always leverage upon that. So that's why it's an important consideration. Right? Work of internal auditors is required to be evaluated. Okay. If at all, let's suppose there are component auditors. Say it's about group audit, wherein the consolidated financial statements have to be audited. There are a lot of group companies. So now, how do you really approach that? Because in such a case, what will happen? It's the parent auditor who will have to decide the scope of work for the component. The approach, the strategy, it is something which the parent will have to do. Why? Because in a way, components are working for whom? Parent only. Right. So till the time they don't get the clarity, they don't get the information which they need to look into, the way the components are going to be audited, or maybe the way they audit the components could be different from what the parent may require. So that alignment is important. So now, at the time of planning, therefore, what will the parent auditor do? Parent auditor will have to consider all of these aspects. So no, and accordingly approach that part. Many a times, there may be some areas which may require expertise of the team members, of the engagement team may not be, you can say, good enough, or they may not be expert in terms of certain areas. Say for example, IT is one piece. Say for example, taxation is another area, wherein the audit team may require experts. So we are not only talking about the management experts here, because management would have, of course, involved them wherever that is required. And auditor will also consider that at the planning stage, that this is something which the management has involved. So how do they really get the comfort on that information which has been sort of, worked out with the help of experts of the management. But at the same time, we are over here also talking about the involvement of the expert of the audit. Yeah. So therefore, we can say at the planning stage, it's not only the management's expert, it's also the auditor's expert, which will get into the consideration. Right? So they are also required to be looked into. Okay. Allocation of work to be undertaken between the joint auditors and the procedures for its control and review. Now, this is another piece which is important. If at all any joint audit is there, what is going to be the work? How is going to be divided amongst the joint auditors? What all procedures need to be put in place? Yes or no? So at the stage of planning only, these are the things which the auditor will have to evaluate. Establishing and coordinating the staffing requirements. Now, this is one piece over which we already have had a lot of discussions. Yeah. So I'll just not repeat that part. Now, moving further, let's look at the next one. Now, as an auditor of garment manufacturing company for the last 5 years. Okay, so over here we are looking at garment manufacturing company. See, basis the industry, what will happen? Approach changes. Correct. Procedures might be different. Consideration in some of the factors might be different. So that's why it's an important area for the auditor to look into. So we are talking about garment manufacturing company. Okay. Now for this company, audit has been going on. So it's not a new audit. So the firm has been auditing the entity for the last 5 years. Yes or no? Right? You have observed that new venture of online shopping has been added by the company during the current years. There is a new venture in place in line with the market's requirements. So it's a new development which has taken place during the year, right? It's been added. What factors would be considered by you in formulating the audit strategy of the company? Yeah, so now in this case, there are a couple of considerations I'm saying at what level we need to consider. See, first, of course, will be what? About this industry particularly. And also the fact that the auditor has been auditing this company for 5 years now. At the same time, we also need to focus upon this aspect, some new development which has taken place. Correct? Yeah. So that's going to be another important consideration, right? So let's look at this. While formulating the audit strategy for this company, what all factors you will consider? So some of the general factors. Now, what are the specific factors you will consider? See, general means general, which you will consider for any entity. for any industry. And some of the points we just discussed for the overall audit plan. Of course, those are the general ones. Will you be considering that? Yes, of course. For this online shopping, which is a peculiar business, now what do? Auditor shall also obtain an understanding of information system, including the related business processes. Now, as a first step, what do? Any new development, if let's suppose has taken place, so you will want to obtain an understanding. Yes or no? So understanding is the first thing you'll have to start with. Correct? Very, very important. Yeah. Now, what are the areas wherein you will get into this? First, classes of transactions in the entity's operations that are significant to the financial statements. Obviously, why? Because anything that is significant, auditor will want to focus on that. Okay. So those are significant. Procedures within both information technology and manual systems by which those transactions are initiated, recorded, processed, corrected as necessary, transferred to the general ledger, and reported in the financial statements. So basically, it's about getting into the details of the process. Yes or no? So the details of the process you'll want to get into. Next, related accounting records, supporting information, and the specific accounts in the financial statements that are used to initiate, record, process, report transactions. This includes correction of incorrect information, how the information is transferred to the general ledger. Records may be in either manual or electronic. So both of them, auditor will have to evaluate. How this IT system captures the events and conditions. Other than those transactions that are significant to the financial statements. Again, you are continuing with the process only, actually. Yeah. Next, controls surrounding journal entries. Okay. Including non-standard journal entries. So once you understand the process, you will also want to get into the risk mitigation, which the management would have done, which is through controls. Okay, so that's why what are those controls which are in place? And considering the nature of the business, considering the systems which are attached, that's what you will always want to get into. You'll always want to look into. Correct? Okay. Now let's look at the next one. During the audit of FMP Limited, it's a listed company. Engagement partner completed his reviews. Okay. And also ensured compliance with independence requirements that apply to the audit engagement. Right? Engagement files were also reviewed by the EQCR, except the independence assessment documentation. So when you talk about the engagement partner ensured compliance with independence requirements. Okay. But this independence assessment documentation has not been looked at by EQCR. EQCR did other things. Okay. Didn't get into this independence assessment documentation. And why so? Because EP means the engagement partner was of the view that matters related to independence assessment, that's the responsibility of engagement partner. So is that true? Answer is yes. In fact, this entire set of financial statements is what, when it comes to the audit, it's the responsibility of the engagement partner. But to say it's the responsibility of engagement partner and not the EQCR, that is something we need to find out. EQCR objected to this, so EQCR has a different thought process and therefore refused to sign off the documentation. Means when the EQCR will complete the work. So what will EQCR do? EQCR will also sign off. Yes or no? Now, basis this SA 220, you need to revise. Correct? So let's look at this. I can just put down this at one place. EP shall form a conclusion on the compliance with independence requirements. So that's what the auditing standard requires. Yeah, so EP has to do this. There's no doubt. In doing so, EP shall, now what are the requirements for the EP? First, obtain the relevant information from the firm, where applicable network firms. Why? Because if there is any sort of independence threat, that needs to be evaluated. Next, evaluate information on identified breaches. Maybe somebody in the firm got into this sort of breach. If you go back to our discussion on SQC1, okay, so therein also we discussed that every time the policy, when you look at, okay, so maybe that's a document available, but its implementation is at the same time. It's possible when somebody will monitor that. Okay, so now, if at all there is anything around that, its evaluation is required. Who will do that? EP, right? And EP is also required to take appropriate action to eliminate such threats or reduce them to an acceptable level by applying safeguards, or to withdraw from the audit engagement wherever withdrawal is permitted by law, and if let's suppose EP wants to do that. Okay. Engagement partner shall promptly report to the firm any inability to resolve the matter for the appropriate action. Yeah. EP shall take responsibility for the reviews being performed in accordance with the firm's review policies and procedures. Now, let's talk about quality control. So when you go look at this SA 220, now what do you do? When it comes to the quality control, particularly for the listed entities, the one that we have in the given scenario, that's where EQCR comes into the picture, correct? And that EQCR becomes important. The role of EQCR such a case becomes important. Now, EQCR on performing an engagement quality control review shall also consider engagement team's evaluation of the firm's independence in relation to the audit engagement. Okay. So this is what the EQCR is required to. Okay. Now, how will the EQCR do that? So that's something for which the access has to be provided to the EQCR. So where does that come from? From the engagement team, from the EP, of course. Yeah. So therefore, in the given case, the thought process of this EP that doesn't seem to be in line with what the auditing standard requires. Correct? Yeah. So that's something which will create a kind of non-compliance for him. Yeah. Let's look at the next one. AKJ Limited. It's a small sized 30-year-old company having the business of manufacturing of pipes. Okay. Company has a plant based out of Dehradun, and their corporate office is in Delhi. Right. Recently, the company appointed new firm of chartered accountants as their statutory auditors. So here again, what do we have? We have a situation wherein it's a new auditor. Okay, so that's the situation we are looking at. So it's a new firm of chartered accountants as their statutory auditors. Okay. Now, statutory auditors want to enter into an engagement letter with the company in respect of their services. But the management has contended that since the statutory audit is mandated by law, engagement letter may not be required. That's one. Auditors did not agree to this, and they've shared a format of engagement letter with the management for their reference. Okay, so they've produced that for the clarity of the management. So that's been provided to the management that this is something we are. So that's what you'll generally see. So when there's a disconnect, what will happen? Both the parties will try to discuss. So this is what the auditors are trying to explain. That it's all about the terms which are there in respect of the work which is assigned to the auditors. Okay. Now, in this respect, management would like to understand that as per SA 210, okay, auditing standard referred to by the auditors. So this is what the auditors have quoted if the agreed terms of the engagement shall be recorded in an engagement letter or maybe some suitable form of written agreement, what should be included in the terms of agreed audit engagement letter? Okay, means what is it that you will always have, right? Clear? Let's look at this. Now, if we go look at the requirements of say 210, agreeing the terms of audit engagements, auditor shall agree the terms of the audit engagement with the management or those charged with governance as a right. So it's something which is mandated to have an engagement letter. Does it become a choice? Therefore, doesn't seem. Now, what all terms you need to put down? Agreed terms shall be recorded in an audit engagement letter and shall include. Now, what does it include? First, objective and scope of audit of financial statements. Okay, so that's something you need to have in place. Responsibilities of the auditor, right? Responsibilities of the auditor. The responsibilities of the management. Identification of applicable financial reporting framework for preparation of financial statements and reference to the expected form and content of any reports to be issued by auditor. And a statement that there may be circumstances in which a report may differ from its expected form and content. Yeah, clear on this? So this is something which is required to be put in place. Yeah, so let's look at the next one. Cineplex, a movie theater complex. Okay, the nature of industry, right? It's the foremost theater located in Delhi. Along with the sale of tickets over the counter and online booking, major portion of the income is from cafe, shops, pubs, etc. Shops, pubs, etc., which are located in the complex. Its other income includes advertisements which are exhibited within or outside the premises, such as hoardings, banners, slides, short films, etc. Okay, so that's the other income. So basically, you can say a business understanding is being provided, right? So now, the facility for parking of vehicles is also provided in the basement of the premises. So that is also generating some revenue for the entity. Cineplex appointed your firm as the auditor of the entity. Being the head of the audit team, you are therefore required to draw an audit plan. Okay, basically it's about an audit. Okay, so now this is required to be drawn initially in respect of its revenue and expenditure, considering the above mentioned facts along with other relevant points relating to such complex. Okay, so now let's understand as to what is it you're going to have in respect of this audit program. Okay, now let's look at this. So when you talk about audit program, so what will happen? Of course, see, audit program will include a lot of things. Basically, it's all about the audit procedures you are going to perform. Yes or no? Yeah. So now what are the things you are going to have there in case of an audit program? So let's understand first. Peruse the memorandum of association and the articles of association of the entity. So that's one. Ensure the object clause permits the entity to engage in this type of business, right? In the case of income from sale of tickets, now what do you do? What do you verify? Verify the control system as to how it is ensured that the collections on sale of tickets of various shows are properly and accurately accounted, right? So basically it's all about looking at the control system. Verify the system relating to online booking of various shows and the systems of realization of money. Okay. Check that there is an overall system of reconciliation of collections, right? With the number of seats available for different shows in a day. Okay. So basically, the reconciliation of collections. As an auditor, you go and test that. Now, as regards the other income which they generate, verify the internal control system and its effectiveness relating to income from cafe, shops, pubs, game zone, etc. located within the particular, right? So that's one. Verify the system of control exercised relating to income receivable from advertisements exhibited within the premises and inside the hall, such as okay, so this system basically you go and audit. Okay, which is around the hoarding, banners, slides, short films, etc. Yeah. So these are the things you will want to look into. Next, verify the system of collection from the parking area. That is also a source of income which is there for this entity. Okay. So the system of collection you will have from the parking areas. In the case of payment to the distributors, verify the system of payment which may be either throughout right payment or percentage of collection, or a combination of. Ensure at the time of settlement any payment of advance made to the distributor is also adjusted against the amount due. Okay, so that is again something we need to get. Yeah, verify the system of payment of salaries. So of course, salary, you can say this expenditure around establishment. There be the uh, will that be an expenditure? Yes, quite significant term, because the nature of business is such that personnel will definitely be involved on the higher side in respect of rendering various types of services. So in terms of their compensation, okay, and because uh, the personnel are involved in the kind of this sort of unskilled at times. Okay, so some of the statutory requirements have to be looked at, right? Verify the payments affected in respect of maintenance of the building and the and ensure the same is in order. Next, verify the insurance premium paid and ensure it covers the dire assets. Yes or no? Yeah. All right. So now let's look at the next one. MK Electronics Limited is a listed company. So the moment you say listed, will happen. Some of the considerations may change. Yeah, because listed is something which is a public interest. Correct. Uh, MK Electronics Limited is a listed company with 8 subsidiaries. So they have 8 subsidiaries spread across various states. Right? Spread across various states. Financial statements of MK Electronics Limited are audited by CMR. So that's the principal auditor. So we have this concept of principal and component auditor here, right? So I think that concept is going to be applied here. So CA Amar is the principal auditor. Okay. CA Amar relies on the work of other auditors. Others means auditors of these 8 subsidiaries. So you can say these are the component auditors. Correct. You are required to explain the procedures that CA Amar will perform to obtain sufficient appropriate audit evidence to ensure work of other auditors is adequate for its purpose. So that's one. Next, explain how he will document the working papers with respect to the subsidiaries audited by others. So first of all, it's about the approach for the other auditors. Why? Because to check work of other auditors is adequate, That's something he needs to get into. Then how he will document the working papers. It's about the documentation in respect of that. Okay. With respect to the subsidiaries audited by other auditors. What matters need to be documented now? Third, I think that's the third aspect here, even though that seems to be clubbed here. So let me just call it as third one. What matters need to be documented if the other auditor's report is modified. So that situation we need to sort of incorporate and accordingly comment on the documentation requirements. Right? So now let's look at this. What are the procedures which the principal auditor will perform? First, advise the other auditor regarding use of his work and report and make sufficient arrangements for coordination at the planning stage. That's important. Yeah, because that's how the communication will start, that's how the flow will start, and that's how the expectation needs to be communicated. Otherwise, component auditor will not get to know about it. Yes or no? So it's the principal auditor who informs other auditor of the matters such as areas requiring special consideration, procedures for identification of intercomponent transactions that may require disclosure, and the timetable for completion of audit. Okay. Right. Next. Advise the other auditor of the significant accounting matter, auditing matter, or any other reporting requirement. Right. Now, why is that important? Because that's how the component auditor will be able to structure his approach. Okay. Next, CA Amar should document in his working papers components, first of all, whose financial information have been audited by other auditors. Means very simply details of the component auditors. Yes or no? Next, procedures performed. Will that be documented? Yes, of course. Conclusions reached. For example, the auditor would document the results of discussions with other auditor and review of written summary of other auditors' procedures. Okay. Now, where the other auditor's report is other than unmodified, means that is modified. So we can put it in a manner that is modified. What is the modification? Let's suppose it's any of the modifications. In such a case, what will happen? Documentation shall include, of course, the modification. Okay. Along with the basis and the working around it. Correct. Yeah. So that is an important part to be looked at. Okay. So now let's look at the next one. CAA has been appointed as auditor of Datacom Limited. So that is to conduct the statutory audit. Okay, so this basically this is about the statutory audit. So what is the name of the company? Datacom Limited. And CAA is the partner. Sorry, auditor. Now, if you look at this company, it has various derivative contracts, options, forwards, interest rate swaps, which were required to be fair valued, for which company got the fair valuation done through an external third party. Okay, so basically, it's the management thing which has been explained. It means something which the company was required to do. Okay. CAA involved a registered valuer, Mr. S, as the auditor's expert. Okay, very good. So now Mr. X has come into the picture. Mr. S as the expert. Okay, and what's the work? Valuation of derivatives in order to obtain sufficient appropriate audit evidence. Now, both the auditor and the expert are new to each other. So they are effectively working for the first time. Okay. Expert, Mr. S, performed his work and submitted the report. Okay, so the work is all done. Auditor, while evaluating the adequacy of work of Mr. S, observed that experts' work involved use of significant assumptions and methods. Consequently, he wants to test relevance and reasonableness of those assumptions and methods. We need to guide the auditor in this regard as per the relevant essay. Right? So let's look at this. Okay. Let's look at this. Testing the relevance and reasonableness of assumptions and the methods used by the auditor's expert. Okay. Now, in this case, what do you find? Okay, so now we have a separate essay which talks about this situation using the work of auditor's expert. So if let's suppose an auditor uses the work of an expert, they must evaluate whether the expert's work is required. Auditor observed that an expert's work involves use of significant assumptions and methods. Yeah. In the given case, so accordingly, what will happen? He must assess the relevance and reasonableness of experts' assumptions, methods, findings in the circumstances as per Essay 620. Right? So that's something which is required to be done. Further, when you talk about this essay, It discusses the assumptions and methods used by the management, including the use in some cases of highly specialized entity developed models. Although that discussion is written in the context of auditor obtaining sufficient appropriate audit evidence regarding what management's assumptions and the methods, it may also assist the auditor when evaluating an auditor's experts assumptions and method. Okay. When an auditor's experts work involves use of significant assumptions and methods, which is possible, factors relevant to the auditor's evaluation of those assumptions and methods include whether they are generally accepted within the auditor's experts field, that's one, consistent with the requirements of applicable financial reporting framework, yeah, dependent on the use of specialized model, again a very important consideration, and consistent with those of management, and if not, okay, basically if you digress, what is the reason? Yes or no? So you need to have the reason, of course. Correct. Now let's look at the next one. Okay, so now let's look at the next one. Messrs. FG and Company, it's a firm of chartered accountants, has been appointed as statutory auditors of Z Limited for the financial year 25-26. Okay, so they have been appointed. During the course of audit, while carrying out risk assessment procedures and the related activities for accounting estimates, CAG, who is the engagement partner, identified that the provision for warranty as an accounting estimate and considered it to be a significant risk. Okay, now in this case, what has happened? We have once again moved into a situation of accounting estimate. Correct. So now what do? Explain the matters that need to be evaluated by this auditor, especially with respect to estimation uncertainty, which is involved being an accounting estimate. Correct. Now, what are the matters? How the management has considered the alternative assumptions or outcomes. If there is something which has been rejected and why. How the management has otherwise addressed estimation uncertainty in making the accounting estimate. Okay, yeah. Basically, you are trying to get into the details. Next, whether the significant assumptions used by the management are reasonable. Sorry. Where relevant to the reasonableness of the significant assumptions or the appropriate application of applicable financial reporting framework Management's intent. Now over here we are talking about the intent. Management's intent to carry out specific courses of action and its liability to do so. Sorry, its ability to do so. Correct. Now let's look at the next one. Yeah. AXO Automobile Limited. It's a leading manufacturer of electric vehicles. Yeah. So we understand the nature of business. Yeah. This company AXO, now this is the name of the company. It appoints WYZ as its auditors for the financial year 24-25. Right? Twenty-four, 25 is what the appointment is for. CAW, who is the engagement partner. Okay, now from WYZ, CAW is there. During the course of audit, identifies the following misstatements. Now, what's the first one? An amount of 4 lakh of rent income has not been recorded due to oversight. Okay. An expense of 6 lakhs pertaining to FY 23-24 has been charged to P&L in 24-25. So basically, it's a prior period. This is also an error. In a sample testing of warranty provisions, projected misstatement in the population is 10 lakhs. Right? So this is what the auditor has done. Now, as around this, let's try to understand the fact pattern. CAW, see over here we are talking about CAW, correct? CAW is of the opinion that above misstatements need to be rectified to portray the correct financial results of the company, which is fine. Management of AXO refused to make the necessary corrections on the condition that these amounts were not material. Okay. Now, with reference to the relevant auditing standard, analyze the circumstances faced by CAW and guide him as to how he should evaluate the effect of these misstatements which are not corrected by the management. Okay. What communication requirements are applicable for the auditor in this situation? Right? Okay, so now let's look at the solution. Okay, so there you go. Now, once again, what do? We'll start quoting with the auditing standard. briefly you are explaining as to what is required to be done. Correct. Now, in the given situation, what do you find? In the given situation, auditor CAW should categorize the identified misstatements to evaluate their nature and impact in case of rent income of 4 lakh, expense of 6 lakhs, which is a private item, and for the projected misstatement in the population, simple test of warranty. So this amount of 10 lakh, right? So this is what they will also do. However, after insisting for rectification to reflect the correct financial results of the company, management refused to make necessary corrections. Okay. So the auditor has been insisting that this needs to be done, and that's why you should do this. Management refused. Correct. Therefore, now in the given situation, CAW shall evaluate the effect of these misstatements which are not corrected by the management. Okay. This is, of course, the guidance we have already discussed. Clear? Next. Okay, so let's look at this. As per SA 620, using the work of an auditor's expert, if the auditor concludes that the work of auditor's expert is not adequate for the auditor's purposes and auditor cannot resolve the matter through additional audit procedures, which may involve further work being performed by both the expert and the auditor, or include employing or engaging another expert, it may be necessary to express modified opinion because the auditor has not obtained sufficient appropriate audit evidence. Correct? In addition, the auditor shall not refer to the work of auditor's expert in an auditor's report containing what? An unmodified opinion unless required by the law or regulation to do so. If such reference is required by law or regulation, what will the auditor do? Auditor shall indicate in the auditor's report that the reference does not reduce his responsibility for the correct. If the auditor makes reference to work of an auditor's expert, okay, in this case, auditor shall indicate in the auditor's report that such reference does not reduce the auditor's responsibility for that opinion. Okay. Auditor in such circumstances may need the permission of auditor's expert before making such a reference. Yeah. Now, in the given case, now let's evaluate the given situation that we have. Auditor cannot reduce his responsibility by giving a name of auditor's expert and thereby issuing an unmodified. Auditor should issue modified audit report and could have given reference to the work of auditor's expert in that report if such reference was relevant to an understanding of a modification to the auditor's opinion. But even in that case, auditor should not have indicated, auditor should not have indicated should have indicated in his report that such reference of auditor's report does not reduce his responsibility for that. Clear? Okay, let's look at this next one. Mohan Limited, right? Having a net worth of 1,750 crore is mandatorily required to comply with this. Company had various complex derivatives. I think it's sort of repetition, so that's why I'll just ignore this one. Let's move on. Next one. It's all about that same sort of one wherein you are engaging an expert. Why? Because this valuation is known. Correct. So let's look at the next one. Gamma Limited is engaged in construction business since year 2014. Auditor understands a thorough estimate in terms of construction is vital to the viability of any construction business and requested the information related to financing and operating estimated costs from the management to review outcome of accounting estimates, including in prior period financial statements and their subsequent re-estimation for the purpose of current period. Now, what has happened? To this, management refused to provide the information to them, as it believed that the judgments, estimates made in prior periods were based on information available at that time, and review of the prior period information should not be done by the auditor in the current financial year. Right? Now, you are required to comment on this. Okay. Yeah, so let's look at this. As per SA 540, auditor shall review outcome of accounting estimates included in the prior period financial statements. Or, where applicable, their subsequent re-estimation for the purpose of current period. Okay. Nature and extent of auditor's review takes account of the nature of accounting estimates and whether the information obtained from the review would be relevant to identifying and assessing the risk of material misstatement of accounting estimates, which are made in the current period financial statements. Okay. Now, an outcome of accounting estimate. Now, if you get it, will often differ from accounting estimate recognized in prior period financial statements. By performing risk assessment procedures to identify and understand reasons for such differences, auditor may obtain what? One, information regarding effectiveness of management's prior period estimation process, from which auditor can judge the likely effectiveness of management's current process, audit evidence that is pertinent to re-estimation in the current period of the prior period accounting estimates. Okay. Then audit evidence of the matters such as estimation uncertainty. Review of prior period accounting estimates may also assist the auditor. Now, this may also assist the auditor in current period. Why? Because by bringing in certain situations which is relevant to them. Auditors' professional skepticism assists in identifying such circumstances or conditions. However, Review is not intended to call into question judgments made in the prior periods that were based on information available at that time. So therefore, in the given case, what will happen? Contention of management is not correct in refusing the relevant information to the monitor. Clear on this? All right. So with this, we are through. Thanks once again for your time today. We can close this session. Ashok, we can close this.